I don't know. I feel you guys are pretty quiet today. So I developed the hypothesis. Let's now talk about bank reconciliation. Bank reconciliation. So this morning I made a video about bank reconciliation. I posted on the Moodle website. Some students didn't learn bank reconciliation in the introductory financial accounting, probably including my student at UFL. I think in 2100, we didn't learn too much about bank reconciliation, okay? So I thought, well, I need to help you to understand what this is really about. But my concern is maybe I don't have enough time for this lecture. So therefore, I thought, well, I'm gonna record it, okay, in the video. If I still have time at the end of tonight, I'm gonna come back to talk more about it. So at least right now, you know, if you want to learn more about bank reconciliation, you could watch that video. So basically, just to summarize, you know, to monitor your cash balance, the bookkeeper, right, will make entries. Every time the bookkeeper receive cash or use cash, the bookkeeper either debit or credit cash, right? So you have a book, right? And you're gonna record all these transactions involving with cash, right? And then where the cash goes, right? You don't keep the cash in your house. You don't keep it in your pocket because, you know, everyone likes it, right? So you want to put it into the bank, right? So you put it into the checking account, saving account is safer. So then you deposit the cash in the bank account, right? So at the end of the day, you have two numbers. So your books tells you how much cash you have, and also the bank statement will tells you how much cash you have, right? And then you would hope these two numbers should agree with each other, right? But often in the real life, these two numbers does not agree with each other, okay? And then your question would be, what is my cash balance then? Should I go with the book or should I go with the bank, right? I would say neither. Neither is correct, okay? So you have to do something called a bank reconciliation to figure out what's the corrected cash account, cash amount, okay? So basically, why we prepare the bank reconciliation, you want to understand why your book and the bank statement does not agree with each other, right? And if you are able to, you know, reconcile them, that's awesome, right? We like reconciliation, right? And then you want to know maybe there are some errors, right? If a bookkeeper made an error, right? So that's the reason why we don't disagree. That's good. You caught the error, okay? And the internal control, make sure the bookkeeper did not steal the cash, right? Make sure the bookkeeper did not steal the cash. If the bookkeeper steal the cash, put the cash into his own pocket, the bank will never receive the cash. So when you do the reconciliation, you can just count that right away, right? Right? Because you're supposed to deposit the cash to the bank. If you decide to keep it into your own pocket, right? So then there's a problem with that. There's a problem because you already credit cash on your book, right? That's why you can issue a check to yourself. So if on your book you credit cash balance decreased, okay? Sorry, deposit. You receive the cash, right, from the account receivable, right? So you need a debit cash, credit AR, right? So your cash balance increased, but your cash on your book, but it does not increase in the bank. So then you can know, oh, so what happened? Who got the cash, right? So this is part of the internal control idea. You can safeguard your cash. 2 steps to reconcile. So you want to figure out what happened, what kind of adjustment I need to make to my book, okay? And then you want to say, okay, so that's one side of the story, and you figure out the correct balance. And then you want to say, what kind of adjustment I need to make to my bank statement? And then you figured out the corrected balance. And now these two corrected balance should agree with each other, okay? So I'm going to, ideally you should do this bank reconciliation on a monthly basis, okay? On a monthly basis. So I'm going to show you one example. So step 1, you want to see, okay, the balance per bank statement, okay? So you receive the bank statement at the end of the month, May 31st. The balance is 58.90. Okay, but according to the company's book record, it is $66,010. Wow, that's quite a big difference there, right? So you better reconcile these two numbers to see what happened. Okay, so what happened? Okay, so you consider deposits in transit. So deposit in transit means the bookkeeper has received the cash. Okay, so the bookkeeper has debited the cash. So the book balance increased. But guess what? That money was not deposited to the bank yet in the transit. Okay, maybe the person who's supposed to deposit the cash to the bank didn't come that day, right? And so the bookkeeper has to lock the cash, in the safe overnight. Okay, and it happened that night is the year end, right? So you have a timing difference. So therefore we call this deposit in transit. The book has recognized the increase in cash, but the bank has not received the cash yet. Okay, so that's 45,300 and May 31st. As you can see, this is all closed to the date, right? To the cutoff date. Outstanding checks. What is outstanding checks? Okay, so the company issued me a check. Guess what? I was really busy. I don't want to go to bank because COVID. Okay, I have lots of money in my bank. I don't live on this check. So guess what? I keep my check in my wallet for 5 days. Okay, until June 5th. Okay. So in the book, the minute the bookkeeper issued a check to me, she is gonna recognize a credit cash. So the minute I receive the check, which is before May 31st, the cash balance is recognized as a decrease on the book. But guess what? The bank balance did not decrease because I have not deposited the check. So the money has not gone from the bank to my account yet because it's on me, right? I haven't deposited yet. Okay, so that's called outstanding checks. Okay, so these are the numbers has been deducted by the bookkeepers on the book, but was not reflected on the bank, right? Because of timing difference. And the bank errors, right? Sometimes the number, the banker, right, process the check wrong, right? Okay, so you have to consider how to fix this error to reflect the true amount of check, right? True amount of check. So now the correct balance should be 65,790. Okay, that's the correct cash balance. And now you're going to deal with the book, the company book, right? The book saying is 66,010, but there's the book error too. Okay, they over recorded a cash deposit. So the bookkeeper made a journal entry wrong. They record this cash deposit twice. Okay, so they have to eliminate one time because they just made something wrong. So they're going to deduct 100, which was over recorded. And then the bank charge, not yet recorded on the book. So maybe the bank charge happened on May 31st, and the bookkeeper did not work on that day. So the bookkeeper only make this journal entry in June 3rd, right? So the timing difference, right? So then you have to make sure you consider that the bank charge for the month of May, right? It's not for the June. So you want to minus this 120. So now you can see, right, the two balance tied up. So your corrected cash balance should be 65,790. Any question? Nobody have questions?
It's pretty straightforward.
Yeah, even though you never learned it, but it's quite straightforward, right? It's a timing difference. Anyone else? Are you working on the case one assignment? This is the thing about online lectures, right? You never know what your students are doing.
Excuse me. What was it that got double reported that you were saying?
Okay. So what happened is the bookkeeper in this scenario made an error. So in May 21st, there is a cash deposit. So for cash deposit, right? So maybe he just recognized the cash increase, right? So it's $100. So he recognized the cash increase 100. But what happened is he over-recorded, I think, by 100. Maybe the amount should be 1,000, but he over-recognized. He put it 1,100. Okay, so the amount of cash goes to the bank is 1,000, but the bookkeeper entered the wrong number. He entered 1,100. Therefore, we had to reverse that $100 of the error. Does that make sense, Mitch?
Yeah. Did he figure that? How did they figure that out? Did they just compare their totals at the end and notice there was a difference?
Yeah. So once you get a
Okay.
bank statement, right, and then you see, okay, I have to look at all these transactions, right, and then you notice, right, there is the cash deposit on the bank is 1,000. On the book, you debit cash for 1,100, and then which number is right?
Yeah.
And then you go to the invoice, you realize, well, yeah, I received $1,000 from the customer. Okay, so the book is wrong. Therefore,
Okay.
I had to adjust the book number to the bank number, to the actual number. So I had to reduce by 100 to make it to be 1,000, right?
Okay.
It could be the bank wrong, but then you think what happened, right? So maybe the bank manager entered the wrong number. It should be 1,100. He write down 1,000, and he keep that $100 to himself, right? So anyways, somebody screwed up, right? When you compare, and you had to investigate. You'll be able to find out what happened.
Okay, makes sense. Thanks.
Yeah, no problem.
Sir, I have a question.
Okay, awesome.
All right. So, although I saw the question in the lyrics case that we have, so it's about checks that were returned unpaid. So let's say one of your clients gives you a check for maybe a service or like for the goods that they bought. So, and the check was returned unpaid. What do you do? So is it that you're going to debit the amount from your own balance or you add it to the bank statement?
Yeah. Very good question. Okay, so this is what happened. You receive the check from the customer, right? The customer is paying you for your service, whatever. Okay, so what are you gonna do on your book? Think about this. The minute you receive a check from a customer, what are you gonna do with your book? What do you debit? What do you credit?
So I will credit accounts receivables and debit cash.
Very good, right? So on your book, your cash balance increased, right?
Yes.
Okay, so now let's take a look at the bank. So you deposit this check to bank, right? Okay. Did the bank collect this cash from the customer?
No.
No. So did the bank balance increase?
It just stayed the same.
Yeah, the bank balance stayed the same. The bank balance did not increase in cash. But on the book, you have already recognized the increase in cash, right? But you don't know. You don't know, right? Because it's a non-efficient check, an SF, right? So then what happened is you realize, oh yeah, now I know what happened. This customer's check was never cleared, right? So I have to reverse my book entry, right? I never really collected this cash from the customer. So I had to reverse my book, right? You had to debit AR, credit cash to reverse that because you never collected that cash. They give you a check, but non-sufficient fund, right? Non-sufficient NSF, non-sufficient fund. So the bank did not collect it. So that means it's still account receivable. You still have to collect it from the customer, right? So you have to reverse the entry about cash collection you recognized, you have to reverse the entry, right? Because the AR is not settled. You still have to collect the AR.
One more question. This is
Yep.
just like I'm digressing a little bit. So let's say that for your account receivables, you know that maybe after 30 days, you deduct like 3% from each account for provisions for bad debt. So for such accounts, for that accounts receivables transaction that you, was it debited or credit? So do you still apply same logic? So let's say that you discovered this maybe like a month after you received the check when you were doing your reconciliation. So do you apply that provisions for bad debt on the amounts you?
Yeah, so basically, if I didn't collect didn't collect it, it's AR. It's not cash, right? I don't worry about it. It's my AR, right?
Okay.
So if in the future I collect it, then it's going to affect the future bank reconciliation, right? In the future, if the bank collected the money, right, the bank balance increased and you debit the cash, your book balance increased. So there's no discrepancy, right? But at this point, the fact that the check didn't go through, that means you should not recognize the cash on book, right? But this is the timing issue, right? Because you received the check, you didn't know ahead of time this is the NSF. So then you debit the cash, right? It's only later on when you try to run through the check over the bank, you realize that check didn't work out, right? So then you realize, guess what? I should not have recognized the cash, okay? So then you have to reverse the entry. So on your book, on step 4, you have to reduce the cash by that amount of money because you never collected that cash. Does that make sense?
Yes, thank you.
Yeah, okay. Anyone else? Okay, so I just want to make one more emphasis, right? After the lecture, send me an email about your participation, okay? From today's lecture ongoing, I will not accept any late notice because I'm happy you think I'm a Superman. I remember everything happened 2 weeks ago, 3 weeks ago. Thank you for a compliment, okay? But I'm not really that kind of genius. I actually can only remember, I only have a short-term memory. So make sure you send me an email right after we finish the lecture. Let me know about your participation, okay? So I just want to make it clear now, okay? Going forward, I will not accept of any late notice about your participation because I feel I'm so challenged of memory and I want to save my memory for preparing the most important things, right? So if you do it now, I remember everything, right? So I think that's good, okay? So make sure, send me an email, please, right away, okay? It just makes things easier for me and for you, okay? Okay, so if you still have a question about bank reconciliation, if I didn't explain it very well here, okay? If you want to, digest this a little bit more, make sure you watch that video, okay? I put 2 pictures side by side to show you the timing difference. Okay, let's move on. Okay, so now you have an option to do this problem, okay? Let's see, what time is it? So I will give you 10 minutes to work on this problem. This is about bank reconciliation. So your bank balance is 66.2787 cents. Your book balance is 56.85 okay? So book balance and bank balance. And they give you a bunch of information here. So just do the bank reconciliation, okay? I give you 10 minutes to work on this. And then we can take a break, okay? And then we can take a break. Did anyone get the answer?
Yeah.
I got
Okay.
5,3.
What's the number? What's the correct balance?
5,399. That's 0.45.
Yeah, that's what I got too.
Yeah.
Awesome. Very good.
Same here.
That is the correct number. 5399.45. That is the correct balance. Good job. If you have already got this number, that is the correct cash balance. Good job. 5399.45. Awesome. Good job. So we have 10 minutes break. Okay, 10 minutes break. Come back in 10 minutes. Okay.